Hi, I'm Kenny Roo. Welcome to Kangaroo Energy, where we share practical knowledge on energy, money, technology, innovation, and everyday life. We have something important today. Let's get into it.
Hi, I am from Kangaroo Energy. Melbourne house prices have slipped right before a major interest rate decision. Most people are reading this the wrong way. Some think it means the market is crashing. Others think it's a buying opportunity. The truth sits somewhere in the middle, and if you're planning to buy, sell, or even just wait, what you do next actually matters. In this video, I'll break down what this dip really means, why it's happening now, and how everyday Australians should think about property. Stay with me, because reacting emotionally here is how people make expensive mistakes. Let's start with what actually happened. Melbourne house prices recorded a short-term decline just as attention turned to the next interest rate call. That timing is not random. Property markets move on expectations. When buyers think rates might stay higher for longer, they pause. That alone can soften prices. Now here's the first thing people get wrong. A price dip does not automatically mean demand has collapsed. In Melbourne, population growth is still strong, rental pressure is intense, and housing supply is not keeping up. The second mistake is assuming this is the same across Australia. Sydney, Brisbane, Perth, and Adelaide all have different pressures. Melbourne has more listings and higher debt sensitivity. That makes it more volatile in moments like this. Interest rates affect borrowing power immediately. Even a small change can reduce what buyers feel comfortable offering. If you're a buyer, waiting for a massive crash is risky. But this slowdown gives you leverage, less competition, and room to negotiate. If you're a seller, realism matters. Overpricing can push you into stagnation. Well-priced properties are still moving. For investors, price growth may pause, but rental demand hasn't. Smart investors focus on cash flow and rental demand. Property markets move in phases: optimism, hesitation, adjustment, and clarity. What we're seeing now is hesitation, not collapse. The smartest thing you can do is align decisions with your personal situation, not the news cycle. Buffers matter more than short-term moves. Melbourne isn't falling apart. This is a market asking you to slow down, think clearly, and act strategically. If you want real conversations about property and money, subscribe, like, and stay informed. I'll see you in the next one.
Hi, I'm Kenny Roo. If this helped, please like the video, subscribe to the channel, and comment what you'd like us to cover next.